I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here. And I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Okay, let's get started. Welcome, everybody. We had a brief hiatus last week due to some technical issues, and now we're back, and really excited to bring some market updates for you guys. And for those that are actively investing, we got some good news that just happened yesterday. We'll be sharing a little bit of that update shortly. Now, just to give you a quick overview of our host organization, this live stream is brought to you by Real Estate IQ, and Real Estate IQ is a lead generation and real estate investment solutions company, and we really focus on bringing more intelligence and data and now deals to the market. One of our best-selling products, right? You probably have seen some of the kind of trailers where folks are kind of extolling the benefits of our data. These are the off-market distressed seller information where we mine the data. There are different signals of distress, and we're able to find those and provide a way to reach out to those motivated sellers, and that allows you as an investor to do the outreach and make the deal. So, some additional success stories, Luis says the targeted list makes you a front runner for contacting the sellers. And Lakeisha, got deals from Real Estate IQ as well. Happy to bring us her testimonial. Salvador got his first deal, about $25,000 to $30,000 profit. And then Jordan, the deals vary. First deal got him $55,000, and the second deal $5,000. Still really good profits. 2 deals in the first month. And then Homero now has a thriving business, and he's also runs a live meetup in Dallas now. And in his first 6 to 7 months, he was using the platform, and he made $100,000, which is a fantastic news. All right, so before we dive into the content today, we are just want to show you a disclaimer. We don't offer investment, financial, or legal advice. Everything we share here is for educational purposes only. And welcome, everybody. See a pretty big crowd here. Now, we're going to start shortly. We just want to also share with you a little bit about our weekly classes. And on Fridays, we have our MAP event, which is a weekly workshop where we're actively doing outreach to motivate sellers together. And so if you're curious or if you're interested in joining us, that's at 9:30 on Friday Central Time. If you need help closing a deal, you can send your deal to me, and either I can help, or if I get stuck, I always have more deal to do. So one of us will be able to help you close the deal. Our speakers, you have yours truly, and actually, I'm going to invite John here to join us. Hey, John.
Hello, Steve. Everyone.
Good to see you.
Good to see you.
Tamla's husband, Randy, just had a heart procedure last week. So unfortunately, they won't be able to join us and give us the deals update. We pray for Randy's quick recovery. And John, I was just thinking that this is actually a good example of kind of the time freedom that we have as entrepreneurs, right? Like you don't have to be concerned about not being able to show up at work. In this case for Tamla, she needed to prioritize her family first, and so she has the freedom to do that. And as partners, we support her. All right. So we're gonna jump straight to the market update, and then John, I don't know if you have a topic prepared for us. If not, we'll end this session short. But we have really good market updates.
Yeah.
So the biggest news here is that we just had the Fed cut the rate again. It was another quarter point this week. It's the third cut of this year. And it also signaled that borrowing costs are unlikely to drop further in the near term as it waits for clarity on the direction of a job market, showing some signs of softening. Inflation is remaining somewhat elevated. And it's expecting the economy to pick up steam next year. So this shift from higher for longer towards a cautious easing cycle obviously affects our cap rates and borrowing cost. And from just my talk with lenders, they're seeing more deals than what are they saying? There are more deals right now than capital. So I think this rate cut is gonna kind of help rebalance.
If I may, Steve, when
Please.
there are more deals than the capital, that means whoever controls the right source of deals will win it. Because deals is flooded everywhere. Not all deals are good deals. Timing and the timeliness are the most factors to win in this market, especially in this window. And the funding, yes, Steve is going to speak about the fundings, right? Where can you get the money that you need at any time at the amount that you demanded for your deal? That's critical. You can't always use your own money or put your house on the reverse mortgage or that sort of thing. It takes time. So we're going to also talk about that as well, Steve, right?
Sure.
Yeah.
All right, our second update, inventory continues to build, which is giving buyers leverage. There are more inventories. Some markets are seeing 30 to 70% year-over-year jumps in for sale inventory. And this shift from, before it was ultra low supply towards the beginning of the pandemic to now towards a more balanced market means that there are more choices, more negotiable sellers, and better entry points for distressed properties.
Yeah, distressed. Mm-hmm.
Our third update, home prices are rising despite more supply. National house prices are still growing at roughly a mid-single digit rate year over year, even though the housing supply has climbed to the highest level in many years, which is very interesting. All right, so we got more deals coming up. We got a couple more deals that we're working on in these markets. And so as they come on contract, we'll be sharing them right here. And if you're interested, make sure you fill out our deals program. And, we want to get some additional information from you to match you up with the deals that come across our desk. And then another part that we also want to encourage you to do is to visit our website and join the sign up for the funding program. And that's the program where we can get you funding to fund your deals. Just kind of one more item here. We have our Deal Accelerator program, where we offer one-on-one deal making mentorship. This is really a program specifically for those, say they have already been through a training or coaching program, and they need that one-on-one support. And so we'll offer you the trainings you need, right? This will be real life, real deals that we'll be using as training, along with offering you the distressed seller leads, also the deals and the funding program. So everything that you need to kind of really get your feet wet on the deals. And in just 10 months, we already got really good traction, right? One of our Deal Accelerator clients got 6 properties and 12 doors, and they're starting to cash flow. So really good success story here too. John, I'm not sure if you we didn't talk about if you have more content prepared for us, but maybe you can also tell us about the year-end special here. I thought it's a really awesome program, a really awesome promotion that we have offering to our investor community.
Yeah, our year-end promotion is extended. Not only that, we also have a special account manager deal, depending really on how our account managers feel about you and how you are going to do your business. They may offer you free access to our data, or they would offer you a steep discount on top of the 50%. Okay, so what are these discounts for? Okay, here we go. So a lot of the time when you attend classes, you spend the money in the investor clubs or groups. The classes, they're talking about off-market leads and they talk about distressed owners and properties. You know, a lot of people don't connect the dots between these, right? So what we're talking about is that you're going to have access to over 4,000 leads, validated leads, mined by our own technicians, engineers. That include, the property pre-foreclosure property early enough. Okay, it's kind of a really early, a month early notifications, right? Those are the properties that under the distress that the owners are put in the position they wanted to recoup the losses as much as possible or avoid foreclosure, right? And we also have, utility change notifications. We have a tax liens, and we have, the property notifications and the code violations. Those are all indications of a distressed ownership. Maybe it's a financial issue, maybe it's health related, maybe it is a work related. In a second, I'm going to show you some statistics and the macroeconomic data. You're going to get to see that. But, get those distressed property and owners information with their emails and the phone numbers. That would cut down your, the time you spend in real, kind of doing your research by at least 80%. Okay. That's what we're talking about, the leads. And on the market, there are people actually resell our data too. But if you like to resell our data, by all means, we'll give you a cut, right? But if you just want to get your leads and do your work, use your VA to make the calls or emails, use a CRM, then you have access to all these. And right now, we're running a huge promotion at this point. For those who are very, very new, we even case by case offer you a month of a free trial with all the leads, but don't ruin the market though. I warn you, don't ruin the market. Okay, call everybody and then don't do anything. That's going to ruin the market, right, Steve? We got some people like crazy nuts doing that, but we're going to coach you on how to make appropriate contact, give you the template for emails, text messages, so you know how to get in touch with the owners, right? They're distressed, but they're not crazy, okay? So you got to approach them with the dignities, with the respect, and with appropriate, professionalism. But with that said, that's the promotion we're going on. And we're going to end it the day after Christmas. Okay. Entrepreneurs, we always work, right? After 26, so we have, do we keep this promotion? No, because we extended this promotion. So right now is a Christmas VIP deal plus a account manager special deal. You got to call them to really find out, right, your situation. And these account managers are also coaches as well. So scan a barcode. We're going to be happy to schedule those one-on-ones with you. Yeah, back to you, Steve.
Cool. I think that's all the slides that I have. You can take a picture of the QR code.
Yeah, take a picture.
Your consultants. And did you want to share your market statistics, John, or?
Yeah. I am going to talk. So this week, instead of talking like a macroly, I decided to share a little bit macroeconomics and how to read the data. Just as Steve mentioned earlier, there are kinds of economic updates such as rate reductions, all that sort. But people don't get what is rate. What does that mean? What does that really relate to my life and my business, right? So I'm going to go through that a little bit. And by all means, we also have a newsletter. I don't know, Steve, if we're going to be able to send a newsletter through this chat, or do we want to? It's in our Teams channel. If you think that this is appropriate, well, I'll leave it to your discretion. How about that?
Let me try that. And for those that are interested, you can send me an email.
Here we go.
Feel free to reach out to us, and we'll
That's
send
right.
you a newsletter because it's such a great content.
Yeah, totally.
And I think the answer is no. I cannot do that on chat, but we can, like I said, just reach out to us, reach out to our account managers, and we'll send you the newsletter. It's actually really good. I just glanced through it.
Tell you what to do with the wholesale business, or what do you focus should be put on, and also the special regional updates such as Austin area. What is going on there? You want to pay attention to these, okay? And as we initiating these calls and the deal discussions, we're making these newsletters more applicable to your business than just for filling you with information, okay? And that's not our intention.
More actionable. Yep.
Yeah, it's all actionable, absolutely. Okay, so we're gonna look at something interesting, okay? And maybe this is my, I would assume that this is what I'm gonna talk about is gonna be new to you. But, just buckle your seatbelt. Enjoy as much as I go through these, because I am an economist, right? So for those who don't know. And what does that mean is I read all the market updates, and I have fun doing it. And also I explain, because I got all the financial licenses, so I'm eligible to make explanations of what is going on. However, to Steve's point, the disclaimer is we are not using this information to direct your investment or give you tax advices. Okay, so be careful with that. Okay, let me pop up my screen and then we get started. All right. Okay. We will start with, whoops, click the wrong one. Okay, we will start it off with the overall market economic update statistics. Okay, it's going to be a little bit of boring. Let me warn you. But once you know these numbers and know what you are looking at, you're going to be so powerful. Okay, let's take a look. So this is this week, all right? Monday is over. Tuesday was over. Okay, let's just cross them out. But Tuesday, there were quite a bit of information that was happening. In fact, the government announced the job openings It's a delayed report from the previous week. And the job opening, it's quite interesting because if you think about the job openings, the forecast is in the middle over here. Oops. Okay, here. This is the forecast, right? Forecast says that there are 7.2 million jobs opening. Previously, it was announced to 7.6, so it was reducing, isn't it? However, the actual number yesterday was 7.7 million. Oh, that's huge news, right? It beats the previous and it beats the forecast. So that is a boost of the stock market yesterday, okay? And also, if you go down the list, and today, and on Wednesday, it was the employer cost index. What does that mean? That means, how much does the employers spend? Is it expensive to hire more people, or is it, what should we do with our labors, right? So the cost index is a 0.8 is reduced, which means what? Means good. The employers should retain or keep their employees. Maybe that's one second. I'm going to show you another number, right? So, and also yesterday talking about the federal budget, okay, the U.S. federal monthly budget. It's going negative, as you can see. It's previously was huge, okay, but this way it's 1/3 of a previous number. So supposed to be powerful, and then very promising. And yesterday they reduced the 20 base points reduction. What is a base points, everyone? Just remember, it's a 0.25%. Okay, that's 25 base points. Okay, it's a reduction. So this year is already 50 base points. It's not a humongous, but it's quite a bit. And in a second, if I got time, I will explain that to y'all. Right. And then Thursday, it's today. What are we going to look at? All right. So actually, it's already announced 8:30 in the morning. They're already talking about initial jobless claims. So every Thursday they talk about that, right? That moved the market quite a bit. And then if you look at it, the initial jobless claims, it went up or went down? Well, went up quite a bit actually for some reason. In a second, I will show you the stats to why the number went up so big. Okay, originally they were forecasting about 223,000, and previous number was 192. So right now we got a 40,000 more initial jobless claim, not a recurring ones. Okay, those who don't find a job continues to claim the jobless. That doesn't count on this number. It's initial. That means what? Layoffs, right? Layoffs, reorgs, or some other extreme situations affecting people's job. So the U.S. trade deficit is a $52 billion compared to the forecast of a 62. Is that a positive? Yeah, it is positive, right? It is positive. That means we're making money now, okay? Instead of we're spending a whole lot of money, to help other people, other countries to make money. So this Friday is a little bit quiet, but there are a couple of, there are several, Federal Reserve president talks, Philadelphia, Cleveland, and Chicago talks. Usually these will move the markets a little bit. They don't talk promising stuff. They usually don't. So usually when they're talking about it, usually the market will go down. So Friday anticipated the market to go down and then fluctuate. Okay. So that's this week. And also the wholesale inventory, the forecast is actually to went up. What does the wholesale inventory mean? That means the the manufacturers or the distributors, they're holding a lot of inventory on their hand. And it's going to affect their cash flow, right? Is that a good thing? Not really. Okay. Go up, that hurt the market. So we'll see. If Friday they announced the number is bigger than 0.1, it will affect the stock market even more. Okay, let's look at the next week. So sorry for the small fonts because I got two charts. So next Monday, they're going to talk about a manufacturing surveys. Okay, so The current government administration is boosting like domestic manufacturing. So if this number goes up, the market will go up, will really go up. But what is the actual? That's what we want to look at. And the home builder confidence index, that's huge. That affects the real estate investors, everyone. You got to pay attention to that, right? Tuesday, it's a busy Tuesday next week, okay? Be careful. Usually busy announcement means a lot of fluctuations in the same day. Stock market, commodities, options, futures, all that will be affected. For instance, they're going to talk about the U.S. employment report. It's a November report, okay? And the U.S. unemployment rate report. And it talks about the hourly wages, okay? So this is going to be a huge information that people will use. And also they're going to talk about the wage changes in the U.S. And they're also talking about the retail price, retail sales. And also they're going to talk about the service industry. So basically the whole economy is going to have a stage show on Tuesday, next Tuesday. And what about the, right? Other than the Tuesday, the Wednesday is pretty quiet, all right? Thursday, a lot of information. For instance, the cost of consumer goods and the production indexes is all that. And those CPIs, price indexes, affecting the stock market and the bank interest rates and all that quite a bit. And next week is a big day. So, by the way, for those who don't know stock market and the financial investment, these hours are all East Standard Time. Okay, so 8:30 that means 7:30. Okay, if you do invest in stock market, make sure you read these numbers. And because again, though, when I read these every week, I give the update. You pretty much know what to expect on that day. Okay. And then you make a decisions on how to make an adjustment to your business or investments. Next Tuesday is Thursday. Both are huge day, very heavy. Friday, they're going to talk about existing home sales and consumer sentiments. Okay, consumer sentiments is something always affect the stock market and affect the lending, affect the interest rate quite a bit. Okay, so far so good. The boring part is over. All right, let's look at some fun part. So this is the 10-year note bond yield. So people don't know what is that. This is a 10-year bond, and there are 30-year bond. Okay, so the Federal Reserve, Fed chairman said we reduced 25 base points. What does that mean? That's not your interest rate. It's not. That is the yield rate. Okay, yield rate. So we are adjusting it from 4.8. Actually, from last year was a 5.2, right? All the way to 4.11 now. And it's supposed to stabilize around 2-ish, okay? 2 to 3%-ish, okay? That's the direction to go. Make my note here. Make a note. This is important, I'm going to tell you, okay? It will affect your retirement and everything. When they reduce this rate, guess what's going to go up? What's going to go down? Write this down. Your retirement bond funds will go up. The mutual fund that is using the using the US note bonds is going to go up. Well, you're saying this is a reducing. Yes, it's like an airplane, okay? It's like an airplane, okay? If the yield goes down and the secondary market is going to go up, that means your mutual funds and your retirement is going to go up. So overall, every time they reduce the yield and everything, that means your retirement money and your mutual fund is going to go up. Okay, especially those who have some of these fixed income bonds and all that. All right. Okay, this is the fun. This is the money, right, Steve? This is the money. All right, so let's keep going. Okay. But that's only one thing. That's only 10-year. Now I'm going to show you a weird chart. This is 30-year and the 3 months, 4 weeks, all these are short terms. This is a 30-year, 20-year, but you got a 6 months and 3 months. All right, watch this, right? Year to date, if you look at this, everything is negative over here. You see that? Everything is negative, but the 30-year and the 20 years is going up, all right? And also the 30-year tips, okay? What does that mean? Okay, so there was one time last year and the previous years, the short-term interest rate is much higher than the long-term interest rate. And that means the bank doesn't want you to save money over there. They give you a CD for like 4%, but only for 3 months. And then after 3 months, you're on your own again, right? That is very unhealthy. But look at this. Isn't that 4-week interest rate yield is higher than 2 years, even higher than 3 years? That's interesting, isn't it? Yes. But now the good news is the long-term yield is going up. Okay, that's a healthy market. That's very healthy, right? Okay, now Zebra. Okay, write this down. This is an interesting index. Very, very interesting index. It's created by a Yale professor. He actually created these charts, and these charts are traded in the New York Stock Exchange, NYSE, right? And this chart, especially this Zebra Edge Index, is a forecast of the consumer's emotion. So if people are thinking this market is going positive, guess what they're going to do? They invest more in the house, in the stock, in everything. But if they think this is kind of a doomy, they're going to pull money back and put it under the carpet or put it into the bank. So if you look at, this is the 0% line. What do you think overall people's feeling? Pretty negative, isn't it? It's negative. These are all changes, by the way. It's all negative changes, fluctuating, but overall it's negative. What does negativity really mean? Well, people prefer conservative investment, such as real estate, okay, gold, and the coins, all that stuff, I can't say. And also, mark my words, silver. I actually announced it. Steve, probably you probably remember a little bit. Through last year and even 2023, I said silver is going to grow tremendously. Well, gold we know is going to grow tremendously because of the NVIDIA, these semiconductors, these chips, right? Because the CPUs and the GPUs, right? Those, I studied the semiconductor before, so gold, they use gold, a lot of gold. But what silver? What does silver do? Silver is a medication and the military, okay, for satellites and bombs and then missiles. They use a lot of silver, okay. Battery, they use silver. So silver this year has already gone up 100%. Yay! So you got to be careful, right? Now, let's take a look at separate things. We're talking about happy stuff, and we're talking about interesting stuff, and not talking about some doomy stuff. Layoffs, okay? The most recent layoff. So if you don't know, on about Thanksgiving, HP, they announced the 4,000 people let it go. Yeah. What a bad decision, right? On Thanksgiving Day to announce that. Yeah, but if you look at this, though, this is a map not only in United States, but also in Israel, India, and all other countries, right? Canada. But if you just look at the U.S. And the light blue, right? The light blue color, the layoffs are slowing down a little bit. Is slowing down a little bit. Okay, and then that's all I want to say for now, just for now. But there are more layoffs. For instance, they're missing the Verizon layoff. Okay, Verizon is making a huge layoff. By the way, when Verizon make a layoff, guess what's going to happen to AT&T, T-Mobile? They will do the same. Okay, that's telecom always affecting each other. So watch it out. And then aviation. Well, the energy market is actually hiring people, just so you know. Okay, financial market is more stable. Consumer market is actually becoming stable. Okay, in US, only in US. Retail is affected quite a bit. Okay, but anyway, so watch out these layoff data. So the residential building permits, is it going up? Take a look. It's not going up. So Steve just talking about the market, the overall trend, right? The more deals than the money that is available. Very true. And the rental, probably in our weekly newsletter, we're talking about the rental business. If you're in the long-term or mid-term rentals, be careful, right? Especially in the Austin area. It's pretty bad. San Antonio is actually okay. Okay. DFW area is still going up. Houston, flat, right? Why Austin is so bad? Well, Austin area, they had a lot of residential building permits issued, and a lot of building or residential building projects started, okay, in Austin area. That really hurt the market, okay, because the market is saturated, right? They don't need a whole lot of buildings to go up there and for renting purposes, right? They don't, all right? So that's what is going on. And we wanted to make sure that you watch this and you know what's going on here. So next is the consumer confidence. As I already showed you from the so-called edge index, zebra edge index, we're already talking about that, the consumers don't think positively about the market. Yeah, they don't. So therefore, it's people are not going to spend a whole lot of money in the market. In the holidays, all that. Guess what they do? They put the money away in a bank or in a conservative investment, such as real estate. So this is our time, everyone. Remember, at the early of the year, I talked about Steven and I keep talking about it. 2025 is the year for real estate investment. Is the year for real estate investment. If you miss it, you missed it. Okay, it's not as big as 2009 or 2010, but it's quite substantial. So don't miss the market. All right. And the next we're going to talk about is housing price. Okay, so the house price is it's still going up, right? Y'all see that. And sometimes the price go up is because of the manufacturing materials, construction materials. Sometimes it's because of the labor, right? The labor. Sometimes it is because the kind of inflation. But not every time is because of inflation or labor, okay? And sometimes it's just because of the migrations. Think about it. Just think for a second. Since the last 4 years, okay, we see housing is going up, rental is going up. Why? We got 20 million people come to this country, right? And who's going to rent for them? Well, government is spending your tax money to rent for them. Okay, so rent is going up. Okay, what do? They buy houses too, just so you know. As long as they have a social security, so they could buy a house too. And right now, the government is trying to stop that or whatever. We don't know where is it going. We're not talking about politics here, but just be mindful, right? The 20 million people, let's just say, it's only 50% of them. That's still 10 million of them are getting housings. Of course, it's going to jack up all the pricing of the single houses, the starter houses, even the rental homes, and also plus the what do we call the I'm sorry, my brain was kind of frozen on that. And the pre-owned houses. It's going to jack it up, right? Even the new housing price is jacking up quite a bit too. Okay, now let's look at the the existing home price. Okay, existing home price, is it going up? Yes, it is going up. Let's look at the chart by itself. Okay, if you look at from the beginning of the third quarter of last year, it went up to December, and in January dropped, and then ever since the mid of the year, it just keep going up, right? So even the existing home sales, the prices start picking up. Watch it out, start picking up. So in our report, in our weekly report, we're talking about the pricing changes, and we specifically talking about the inventory, the days on the market, okay, and the price changes over the week, right? And right now, the days on the market is over 80 days in Texas. That's quite a bit, okay? And there are houses that 200 days couldn't sell, 100 days couldn't sell, but there are houses that could sell within a week or month-ish, okay? All right, last chart. The residential house started. Okay, they overbuilt quite a bit, okay? Overbuilt last year and at the end of last year and the beginning of this year. You remember that the permits, right? The permits is going down, okay? And nobody wants to apply for permits to build communities, right? But not only that, the house is being built less. What does that mean? Existing house price is going to continue to rise unless you use off-market leads. You use distressed owner and the property leads to do your deals. Otherwise, it's gonna cost you quite a bit of money to invest. All right. So keep watching these, and we will continue to monitor the market for you, with you, and that's what the Real Estate IQ stands for. IQ is intelligence. We're the intelligence office for you. And if you need to know more and you want to get the access to our newsletter, free of charge, but you gotta let us know though. Yeah. That'll be the market update. Steve, back to you.
Thank you, John. That was wonderful. Fantastic. Really enjoyed that. All right, so we're going to end the session, but before that, I want to tell you about our upcoming events. So this evening at 6 o'clock Central Time, we have a really awesome class called How to Fund Your Real Estate Deals.
Mm-hmm.
Exactly talking about what we need is how to get capital to fund your deals. Then tomorrow we have two events. One is the Deal Makers, where we talk about, it's going to be a live workshop where we actively do outreach to distressed sellers. And then we have also the Friday open house, where you really see the strategy and the vision of what we're trying to build here at Real Estate IQ and how you can participate in this movement.
That's right.
And then for Saturday, if you're free, again, there's another opportunity to catch the class on funding your deals. All right, that's all we have today.
Exciting.
Really appreciate everybody joining us. And the year is not over yet. There's plenty of time to really get started here. So to end, I want to just say, make sure you take action. We can get as much knowledge as we want, but unless we take action, it actually can get kind of stressful, because unless you really put that into action and manifest that, it just useless information sitting on in your head.
Exactly.
So just take the advantage, right? Take action, and you can start your real estate investment journey with us. Now, with that said, have a great rest of Thursday, and we're gonna catch you at the other events for the rest of the week.
Yes.
Thanks, everybody.
Thank you, everyone. Have a good day. Good night. See y'all later. Bye, Steve.
Bye-bye. Thank you, John.